Hey everyone. Hopefully you're having a good day. I'm going to talk about my portfolio holdings. And I just want to make sure that everybody understands what I hold and why I hold it. How it's split up. I know some people ask me, what are my holdings? What do I have it in? I'll share everything. It doesn't matter to me. I'll let you know what I'm holding. Kind of what the percentages are and why I'm doing it. So let's get in here. This is my portfolio holdings. So what sectors am I overweight? Let's take a peek into my portfolio, see what's happened to it. Where's the bulk of my holdings? Why do I hold so much of those holdings? Remember the squeeze and the gains in terms of short squeezes and whatnot. And again, I don't have all the answers. And this is not financial advice. I'm just telling you what I'm doing, how I've got my portfolio allocated. I do not have all the answers here, but I've been in the market. I have made a lot of money. And you guys can maybe learn from that. So here's my portfolio allocation. This is from a really high level view. Physical precious metals, big portion of it. Equities, big portion. And real estate. Real estate, all I own is the house that I live in. Now, someone's going to say, Robert Kiyosaki said that you should be cash flowing it. I am not cash flowing it. But you know what I'm doing? If I rent the house I'm in, so let me come back here. If I rent the house I'm in, it's going to cost me about $2,300 to $2,500 a month in rent plus utilities. I pay less than half of that by owning it. So what I'm doing is I'm controlling my liabilities. I am controlling my liabilities and cutting them in half with a small portion of my money for a down payment. It is far cheaper for me to buy something and lock in my costs and pay the house back with depreciating currency than it would be to rent at twice the price in an increasing home price environment. Now, I know people, you shouldn't be speculating on homes. Well, I do. I speculate. That's why I have this channel. I speculate on a lot of stuff. I saw that house prices were down. I locked it in, bought a house, locked in low rates, refinanced when it went lower, and now I've got really low payments. That's what I did. So that's a disclosure. So that's my real estate holdings. Real estate's done very well. And then I've got physical precious metals. That is literally physical holdings. I hold it in a safe somewhere. I'm not going to tell you where. It is not at my house. And then I've got equities. Equities are broken up. I'm going to go into that. I have 4 portfolios. I did a smaller individual portfolio I have outside of IRAs. I did my big speculative portfolio that are in a Roth IRA. I did a medium portfolio that's my wife's. And I did not include royalty and diversified mining portfolio and my 401k, which is a bunch of mutual funds. So let's go into that. I have a 401k and royalty and miners. I have 20% of my entire net worth in my 401k in mutual funds. I have another good chunk of my net worth in diversified mining companies and royalty companies. Those companies are listed below: Southern Copper, Vale, Rio, BHP, South 32, Norilsk Nickel, Nova Royalty, Ely Gold, EMX Royalty, Wheaton Precious Metals. And I have more than that. I just listed some off the top of my head. I have mutual funds that are in precious metals, energy services, material resources, and ones that aren't in natural resource areas. Some that aren't. I am very precious metal, energy, and copper nickel heavy in my portfolios here. I have 0 exploration companies in this portfolio itself. 0. This is my lower risk portfolio. I call this the anchor. I anchor it. This is stuff that isn't as volatile. There are some speculative stuff in there, and I'm trying to grow it. I'm trying to make sure that this grows continually. Now, companies in the other following portfolio of 20%. So 20% is, let's say 40% net worth. In total, I've got 20% in the lower risk stuff. I have 20% in the higher risk, more speculative stuff. This is small cap oil companies and explorers, small uranium explorers and developers, small mid cap silver companies. I have some miscellaneous companies in fertilizers, graphite, rare earth metals or rare earth elements, etc. I've got it all over the place. This is what it looks like. This is my current holdings in the smaller portfolio. Big oil and uranium is where this mainly resides. And remember, I've got a lot of precious metal holdings in my other portfolio, so I'm not holding as much. These are my exploration portfolio holdings of the metals. Precious metals here and my other metals. I don't hold as much. Remember that. And then I've got the other section here with graphite and rare earth metals and whatever else is in there. This was a little bit different, but oil grew so big and uranium took off that they started to dominate the portfolio, while some of the other stuff kind of pulled back or didn't do as well. But I did put a larger percent into oil and uranium on the get-go as well, because I own more precious metals in my other portfolios than this one. Here's another one. This is the big one. This is my big speculation portfolio. It's very heavy weighted uranium and oil. Those are the two big weightings, probably 60% or more. About 60% maybe for these two. I've got a bunch of other stuff in there. You're probably going to see some like a Mosaic, an Intrepid Potash. You might see some graphite stuff, some rare earth metals. You're going to see some precious metals in terms of these are more of the swinging for the fence, the metallic minerals, the discovery metals, the Teuton Resources I think I have in there as well, and Free Gold Ventures. I've got a whole bunch of stuff in there that's more speculative, two-door gold. I've got metals in here like a Taseko Mines, Nova Royalty, Trilogy Metals. I've got maybe some nickel companies that I've got in here. And this is the same thing, just big holdings. Oh, this is a before and after. This is what it looked like before when I originally put the money in. This is what it looked like after, because some went down and some went massive, and oil just blew up in my portfolio. Same with uranium. And I'm just leaving it. I'm not going to touch it. But these were the original holdings I put in, and then oil just absolutely crushed it. Same with uranium, which really compressed down the precious metal sector, and the other metal sector blew up a little bit. My medium portfolio, this is what the allocations look like. Again, oil, uranium, precious metals is pretty big. I've got a little bit of other and a little bit of base metals in it. And this is my physical precious metals holdings. This is 20% or something like that of my net worth. I'm very heavily in silver. I do have a gold stake. That's that gray slice in there. And then this is my platinum stake. The reason these are bigger, the silver and platinum, is because I got better deals on it and the ratios were cheap. I go wherever it's cheap, wherever the best value is, I go and I accumulate that. And you know what? I've been accumulating metals for a very long time. So this isn't something that I did for 6 months and I expect a return like snap your fingers, it's done. I might be accumulating these things for 4 or 5 years. And then I swap it later on. I used to own a bunch of palladium, but I swapped it for platinum when the ratios got out of sync and I saw what I think is a bottom. So I swapped my palladium into platinum. Was that the right decision? I don't know. The ratios were cheap. They were favorable for platinum, so I did the swap. I did it in April of 2020, where I thought I got very good terms there. I did have to wait a long time for the platinum, but I did it. So that's my holdings right there. That's you can see what I own. You can see the majority. If you guys want to do whatever, my reasoning is I want to have a good stable base. The base is I've got a lot of money exposed to real estate. I have a lot of money exposed to physical precious metals. Then I go of the 40% remaining, roughly 20% is in the big diversified mining companies and mutual funds. I'm not taking the risk there. And then the other 20%, I'd say maybe 15% of that or less, I'm swinging for the fence, baby. I'm going for it. I'm doing exploration companies. I'm doing Reconnaissance Africa. I'm doing Pierpoint, Uranium, Baseload. All those are in that smaller thing. So I swing for the fences on some of it. if you guys are swinging for the fence on all of your portfolio, that may not work out as well for you. You better be able to stomach some volatility. But I just want to make sure that everybody understands what I'm doing with my portfolios. And again, I'm not an expert. This isn't advice. This is just what I'm doing with my own money. And even if you had an expert, they'll probably rip mine apart and say that I have too much risk. Maybe. They'll probably say I need the S&P 500, more of that. But you know what? I go where the undervalued spots are. And then I put my money there and I just wait. If you guys like this content, give me a thumbs up. If you guys need any more help, put it in the comment section. Love to hear your guys' opinion. And thank you for listening. This is Finding Value.